Hello, everybody. It's great to be here one more time today. My name is Gary Fowler. I'm the CEO, president, and founder of GSD, Get You Done Venture Studios, premier AI quantum venture studio located in the heart of Silicon Valley. We are a family office. We are a group, GSD Reach, which is our PR group and marketing. And we're also a software development doing frontier sciences. So today on GSD Presents Silicon Valley AI and Tech, I am pleased to introduce my friend Massimo. We bring together the builders, innovators, and visionaries shaping the future of global markets. Today's topic is BaaS and digital assets, the new rules of global finance. We're at a pivotal moment where banking no longer confined to banks, assets are no longer just physical, and financial infrastructure becoming embedded, programmable, and intelligent. From banking as a service to tokenized real-world assets, we're witnessing the complete re-architecture of global finance. Joining us today is my friend Massimo Barone, CEO and founder of SmartCard Marketing Systems. He's got over 30 years worth of experience with more than 200 deployments across digital banking, payments, blockchain, and AI-driven financial systems. He's been at the forefront of this transformation, helping enterprise and startups navigate the convergence of fintech, AI, and digital assets. With that, I'd like to bring my friend Massimo on board. Hi, Massimo.
Hey, Gary. Thanks for having me.
You know, you've been in fintech for over 3 decades. What are some of the fundamental shifts that you're seeing today that make this movement and moment different from previous waves like online banking or mobile payments?
I think the biggest differentiation that I've seen across in the last 10 years versus the other is that the acceptance and necessity to make change happen is in everyone's will, because what happened prior is that they weren't sure, they were contemplating, what direction do they take? Let's keep the moat in place, where today it's about survival, so sustainability, and the customer has changed. And the customer is in the market, not as now today, as opposed to it was the bank that was in the market. So that whole shift really made everything flip. So we saw that happening early on. Those were the days where the doors were closed on us all the time for even opening up the discussion. Mm-hmm. But that's changed now they're calling. So
I was just down in Africa. I did a presentation at Zenith Bank, which is the third largest bank on the continent, with Jim Ovid and some interesting people there. And I see there, there's over 1 billion people, and they're rewriting the rules, banking the unbanked. I met with M-Pesa, the CEO of M-Pesa, and there's a lot of changes taking place in these areas. How big and how inclusive is this? We got 8.1 billion people on the planet. How wide is this going to go, Massimo? Is it just for the U.S.? Is it just for Europe, or is it the rest of the world?
It's for the rest of the world. The U.S. was always considered the primary corridor. Everything was every channel in, every channel out from the U.S. Today, a lot of countries or structures are realizing that they need to be specific channels, specific corridors. The U.S. may not be involved. Obviously, there's always a corridor that goes to the U.S. because funds have to come in and out as well. But Africa, for example, it took us 7-8 years just to establish relationships, because the infrastructure can't support high volume transactions. Everything's manual labor, right? And although that's still an issue also in North America for some banks, but they're rewriting the rules, right? They had an early adoption of digital assets and tokenization, early adoption of crypto exchanges. That last mover in, first out, well, it paid off, right? So now they're looking for transparency. They're trying to build up on integrity, and of course, open networks are making everything possible. Currency is still a challenge, but stable coins is chipping away at that integrity, right? So
well, I mean, you can feel it taking place, right? Like you're not going to use pennies anymore. I mean, there's a move to digital transactions. I mean, it's it's crazy because it's interesting. How do you know who's too short? If you go in and you're 4 cents off on something, who's the one that's going to eat the 4 cents or benefit from it? It's crazy. It could be a big number, by the way, over time.
It is, but people, I've learned early on, thankfully, that people pay for smarter regulated transactions than they will pay for, riskier, costly endeavors, because of course you end up at zero anyway, the other way. If you don't come in with something that's stable and trustworthy, even though it's a little costly, they will come down, but there's a cost always to having first mover, right? Or, people adopt something. And then, of course, you can't get away from it. And, the misconception example in crypto was it's for everyone. It's going to get to the underbanked. It's going to be cheaper, maybe tomorrow. But today you still have to deal with intermediaries, off-ramping liquidity, getting it to someone's account, or finding a way to get it into cash into their hands through different endpoints. So that fee gets chipped or added on, all across. So it's still got its challenge to come down. But, obviously now, we have alternative payments, we have standard payments, and they're making a path, inward. So, globalization is almost intact. So it's all coming forward,
Now, how do you define modern banking as a service versus the earlier API banking models?
Oh, wow. Today, it's all digital payments. Your bank has to have multiple channels, or you have to. In my case, we found a bank. We worked with a sponsor bank and trust in the U.S., and we developed the whole digital layout. We helped the bank find the blind spots. We worked on connecting over 105 different global channels, so the bank could support everything digital. Okay, including crypto, off-ramping, on-ramping, sub-accounts, everything you think about today that you might only get at a well-structured, JP Morgan. There's no bank size anymore. The smallest bank today, which is proven in the US, the smallest bank can become the largest player in crypto, and everyone else just didn't see what was happening. So we took that model, we developed it into our technology, and then with the bank, we're providing that technology to clients so that the bank can support high volume transactions, which in the past was taken over by the risk and reward department of a bank. So even though the bank wanted to do something, their compliance was saying, just not going to happen, right? So that's all changed. Compliance is digital, it's faster. So everyone's almost caught up to efficiency and, of course, optimizing that transaction flow.
Who's winning in banking as a service right now? Banks, fintechs, or non-financial brands embedding finance?
I'm going to say, I'm going to put myself here in a spot. I'm going to say companies like mine who are doing the value add. You can have a great bank, you can have great support, but it's proven today that if you don't have value added services or the technology that's turnkey in some form of, we offer platforms as a service or some form of SaaS model, the client is overwhelmed by trying to activate those services, and streamline them into their business. So I think the pivotal role comes in and, plug and play and activate. And that's what's got to win. So fintechs, I think, have to redefine themselves. Obviously, the ones that are most popular today are grasping and trying to plug in a lot of alternative payment methods. But you also see, if you've been watching the news, a lot of them are taking the role where they're trying to become banks in the US now under the new act, right? So fintechs may disappear. They all might become US regulated banks. But I think what's happening is I'd rather be on the value add side, because if I'm dealing with the client and activating their model, I get to participate in underwriting and bringing them to the channels that I am partnered with. And of course, bring theirs in. But it does give us the first mover with the customer.
Where do you see margin compression or value creation happening in the banking as a service ecosystem? Is it happening? Do you see? Yeah, and we talked about value, right? But what about margin compression? Is that happening too or not?
Well, I come from the alternative payment space with banks. So and kind of give you an understanding where I was is think PayPal in the day, or think Square in the model sense, it was a challenge for them to find banks. So, and in my belief is, if I have a client and if I don't bring them a bank who's willing to go through my services, then projects just fail. They stop, right? And if you don't have a bank to support you, you can't bring customers in. And it's funny. We worked with Visa over the last 18 months to 2 years. We saw beautiful projects in the market, but those projects fail because the sponsor or the banks don't want to take the client on, even though they're a card scheme member. They're saying, well, we don't have an appetite for this, right? So I said, look, I got to correct the problem. I went to find a bank, 18 months of education, developing the solution, helping the underwriting team understanding how these fund flows are going to work, and getting sponsor letters. Now projects come to market because I fundamentally have an institution that adopted the rules that I'm playing with. So my level of success is much higher, and clients find a place to actually perform, and work from. So it's a combo.
So how do you see like the tokenizations of real world assets changing liquidity in capital markets? Is that going to happen from your standpoint or not? Are we at that, we were kind of up, we were down. Where are we now with that?
So I'm a big promoter of the, IEO or ICO, the initial exchange offering or coin offering versus the IPO. I was part of equity markets for 20 something years. I saw the decline. I saw the loss of interest if you're not a big brand. And we have, the report says there's about 50 million new startups a year. Okay, that's a big number. And when you consider that they need a global audience, they can't just reside no longer on a local audience. The typical roadshow doesn't work. So the market shifted. Now, as of yesterday, actually, the SEC and the CFTC, we should applaud them for a major rule change to the Digital Asset Act, which came out yesterday, which really favored us entirely because we've been developing token issuers for real world assets and utilities. And recently we took a chance, a big one. We launched what we call Xfund.Ventures. And it's a pre-token, post-token offering model, sustainability model for token issuers of all digital assets. So, think of it as an early adoption of a OTC markets or CNSX type, where the government had very specific rules for micro companies to get into that whole investment cycle. The difference is, instead of siloed in one market, now you can tap into almost 200 global exchanges around the world on the crypto side, and structured properly, of course. Now you have offerings that can, sky's the limit to capacity. So the major shift.
What do you think, in terms of, I see real estate plays, but what industries are going to be most disrupted first by tokenization? I mean, you hear about it in real estate, you hear about it in energy and commodities, but I don't see any broad brush. I hear about these companies, but I don't see it. Is it happening or,
From my experience, we had an early adoption 2 years ago in the mining sector in gold. We brought one of the first gold claims to market under Nugget Trap. It was really unfolding there because it helped us build a guidance model as well. Our pipeline is filled with lithium, gold, silver, family offices bringing their ventures and mining claims or production claims to market. We just recently did a deal in the Middle East, with Qatar and so forth, King Saudi Arabia, for their mining projects in the Philippines. So I think mining is going to have a major win. And then energy. I know you said energy. Look, we're partnered with, I think, the largest energy utility company in the world called Larsen Toubro, LNT.
Mm-hmm.
It's open. I mean, it's everyone knows that we talk to. We've been working on infrastructure for digital assets. We've been working on tokenizing solar programs and credits, and the list goes on. So And look, the size and scale is enormous, right? You're talking about mining projects that are holding 2, 3 million, 4 million ounces of gold or tonnage and silver.
Unbelievable.
And unbelievable. So, they said that target market was 30 trillion by 2030. The bond market, equities are being tokenized now on the exchanges. I mean, look, I think there's going to be a split hair. You're going to have public companies that their equities are tokenized, and then they're going to have programs that are going to be tokenized as a digital strategy from those equities. And I think it's going to be crazy what's unfolding. And the SEC saw it, and yesterday that new ruling just lifted it up and said, go for it. So, we're lucky we're creating the curve.
Yeah.
Usually, sometimes we're behind the curve, but this one here, I think we nailed it. So,
you've integrated AI into financial systems. How's AI reshaping payments, fraud detection, and financial decision making today?
It's about fast velocity. Actually, it's about interpreting the data, the good one, the bad one. Making sure that the AI is well equipped. I know it's kind of a funny statement, but the AI has to understand the modeling. Once it understands the modeling, the ultimate in AI is human intervention with underwriting. Right now,
I have one of those in my portfolio right now. So one of those companies that's working on that directly. It's out of the UK.
Yep. Well, I think it's if you could create a discipline or if AI generates a discipline for your underwriting, and it's also embedded in your transaction flow, your AML, your compliance. Look, if you're going to get into businesses that generate high velocity transactions, onboarding, you need the efficacy of AI to help you manage it all. Because look, you can throw as many people as you want at it, but they're not in the data.
Yeah.
AI is in the data, and that's the bridge. So you model it out right, it's a win-win.
So do you see AI evolving from a support tool to an autonomous financial operator, like essentially like a digital CFO or AI banker?
I wouldn't be surprised if we're already there. I mean, I use it. I use all 5 of them or 6 of them, every day. It's created an efficiency for me, I think personally, of about 30-40%, which means my schedule's, able to take on more.
Are you using OpenClaw, Massimo? Have you tried that yet?
Claude?
OpenClaw.
No, OpenClaw, no. I've not used an OpenClaw yet.
It's one of the hottest tools out there. If you get a chance, you might want to take a look at it.
I will. Appreciate it. I've been, structurally, I've been using Claude, ChatGPT, Perplexity, Gamma, and one more, which I don't know why it's skipping my mind. But, and each a Grok. And each one plays a very specific role in what I'm doing. And then, of course, I cross over sometimes to edit or implement some structural stuff that one doesn't do as well as the other. But when they collaborate, they're a very powerful team.
And have you done any multi-agent LLMs like that and have them collaborate as a think tank?
We have. We actually had our own. Well, we have our own product. We called it a bot's life, right? Kind of pun on this whole situation. I actually created a master class for payments with AI. I know we're tweaking it, but we used it across agents or ISOs to basically capture the customer environment and the projects, and then help them search the platforms and the modeling that would be required for a customer. And we used, I took as much data I could in the last 15 years that we had of projects and assessment, and we dumped it all in there. And we indexed it. We went to including diagram flows, workflows, so all that will become available in our own engine. And we got some flaws, but we're very close. And I could almost have a conversation with myself on strategy. so,
There you go.
so I think it's close. I lost a couple arguments, but it's pretty good.
I have a multi-agent large language model, 14 as a team. It's actually listened to our conversation right now, and she's coming up with questions. And so I've been working on this model for a long time. Remember, in 2016, I started one of the first generative AI companies 3 years before OpenAI. So I'm actually using one of those models now, and it's asking you it's coming up and it's prompting me. It knows me. It's like my grandmother's empathy and compassion. But here's what it just asked me. It said, ask Massimo, how do AI and digital assets intersect? Are we moving toward intelligent, self-executing financial ecosystems?
Absolutely. It's a great question because AI is helping you define the best corridors, best channels, and of course, everything today is about cost, and the digital assets marketing or crypto market is based on fee structures, optimal times, best channels, best routes. So, if the AI gets really adapted or adopts, your structure, and it knows your available channels, and remember, it has to know what you're legally or routes that you can legally opt into and not OFAC sanction, right? You have a powerful candidate. Of course, then that just trickles down into finance, right? Because then all of a sudden, it's interpreting all the points in a conversation, which you try to teach employees, even at a bank level, where to find actionable items, where to find opportunities to upsell a product. And sometimes, if all your employees were exactly at the same place structurally, you have an award-winning team. But that's not the truth for teams, right? You have staff that come and go. Retention in banks is hard. So banks trying to keep their employees streamlined is very difficult, especially in contact centers. So AI helps, streamline the inefficiencies, picks up those points, and then, where you have team leaders who are monitoring calls in whisper mode, or they're trying to figure out, performance reviews, the AI basically helps them, kind of methodically, with where the gaps are. And look, that's how you win today. You can't be shy. You got to admit it, that it's about this, performance and efficiency.
What do you think the risks are of AI-driven finance around areas like trust, bias, and systemic risk, right? Because, when we're building these models, I told you we're using empathy and compassion, and we're parenting and training the models to do the right thing. But I mean, I've also heard of some other things that have happened that, there could be risk, right? You put your system and you decide, hey, listen, we're going to have something because it's 1,000 times faster, and then all of a sudden it takes over the system.
The phrase, I do not trust you.
Uh-huh.
The AI will generate responsive models. If you remember, Gary, back in the day, predictive dialers, we created predictive responses based on cues, IVRs and so forth, right?
Mm-hmm.
Here, the AI is faster, interpretive. It doesn't matter which direction the conversation takes, it follows, right? And successfully, I think the problem is, look, human intervention, or, I call it human intervention internally, because, man in the middle, the underwriter ultimately has to sign off. And if you want the AI to go as far as approving the underwriting without Overwatch, I mean, look, that's, we don't know yet what mistakes it's going to make.
Well, who's going to be responsible? That's a problem, Massimo. I wouldn't want my name on it. I mean, I have to make sure I'm looking at every one of them, because you don't want that mistake and, have the regulatory authorities coming after you because of some mistake, whether unintentional or intentional, right?
Yep. I said to someone recently, because they draft their contracts using AI, and look, it gets you to a very proficient place without legal. I said, but I said, if you don't know what to put in or bake into the agreement, and you don't ask those and index the right questions, or
You don't know, point, you don't know what you don't know. That's the problem.
Right. So it all looks great.
Yeah, it all looks great, but that doesn't mean it's right.
Correct. Or there's a gap in the documents that it's not interpreted because it doesn't know what you're looking for or what you need. So, and that comes with the experience side, right? So, I've seen over the years, crazy underwritings where the bank, everything in the computer says this deal's bad. Analyst comes in, tweaks the points, makes sure everything's fine, and then goes to underwriting and it's approved, right? But like your point, it's up to the budget and the who's going to champion the last piece, and of course that human intervention is absolutely necessary.
So, yeah, well, the hybrid model, I agree with you 100%.
Yeah.
How do companies balance innovation with regulatory complexity across regions like the U.S., Europe, and emerging markets? I mean, it's like a wind du jour, right? Sometimes it's this, sometimes it's that. How do you do it? It's like, on the AI side, I know how to solve the problem because I would just continuously sense a market, and any changes there, I would be flagged to the changes and then figure out what I need to do to comply, right? And then I would have a toggle switch and said, okay, especially if I would understand it enough, have a toggle switch that basically, okay, let's insert this, or let's, just like you said, oversight, right? But it is a problem because but now we've got a way to manage this financial infobesity and regulatory infobesity.
Well, if you're going to be global and not stay local, you need connections and resources with legal. You need to know or the country you're dealing with, or, you need to know, I call it daily breakfast, in the US, from the SEC, CFTC, FinCEN, Canada, FinTrack, you've got to follow so many anti-money laundering and of course, OFAC and everything in there regularly because it's shifting so fast. Then you have all the compliance certifications of, all the infrastructures in every country, PCI DSS and EOC and this and that, and then ISO's standards. And then, you move across the pond and it's some components have made it standardized, but you're dealing with a whole different structure, compliance, regulatory, money doesn't move in all the countries like Brazil, money doesn't flow out, or Trinidad, these places there's sanctions, there's restrictions, there's limits, and you have to interpret all this stuff, and obviously through partners is a must. Regulated partners, obviously, who have a whip on it, and then of course you need to have some form of guidance structure that you follow because it's a day-to-day business.
I agree. Not, we're coming up to the top of the show, Massimo. So closing thoughts and how do people get a hold of you?
Email, obviously, Barone at smartcardmarketingsystem.com. My office number is 1-844-843-7296, extension 701, or, visit the website, smartcardmarketingsystem.com, and LinkedIn, obviously, under my profile or one of the company pages. You can DM us. Pretty easy to find. The information's been there for a while. So
that's great. I want to thank you so much for taking time out of your busy schedule to join me today. And I want to thank all of you for joining us from around the world on GST Presents Top Global Startups. My name is Gary Fowler, and I'm your host. Stay tuned for another exciting edition. Like and subscribe, and stay happy, stay safe, and stay healthy. And I'll be back to you again soon with another exciting edition. Thanks, Massimo, and thank you, everyone.
Thanks, man. Appreciate it very much. Take care.